Friends, hello all of you. This video is an attempt to explain you all very briefly about the books of account which are required to be maintained by various charitable organizations. You must be knowing these charitable organizations are popularly called as NGOs. And these NGOs can be, in fact, it may be a trust, it may be a society, it may be a company which is registered under Section 8 of the Companies Act 2013. Generally, we see these three possibilities. And you see, if it is a Section 8 company or a company which is registered under Section 8 of the Companies Act, then under Companies Act, Chapter 9 in detail talks about what are the books of account which are required to be maintained. So that has to be complied with. But in this video, we'll be talking with reference to Income Tax Act. So this is applicable to all types of charitable entities, whether it is a trust or society or a Section 8 company. Let us look into that. Let me share the screen with you right now. Just give me a second for that. Yes, friends. I think we are able to see my screen. Just one second. What I'm showing you right now, this is a notification which is issued by Central Board of Direct Taxes on 10th August 2022. I request all the stakeholders, those who are dealing with charitable organization, to download this particular notification, and it will help you to understand in detail what are the requirements as regards to maintenance of books of account. If you look at here, this is talking about books of account and other documents to be kept and maintained. So this is a particular rule, Income Tax Rule 1962. Okay, after rule number 17A, this 17AA has been inserted. Now, one by one, we'll discuss. Very briefly, we are going to discuss. Detail you can learn by downloading this particular notification. Now, what is this rule 17AA? Quickly, I will take you to all that. First of all, you see, first sub-rule says every fund or institution or trust or any university or other educational institution or any hospital or other medical institution which is required to keep and maintain books of account and other documents under Clause A of 10th provision of Clause 23C of Section 10 of the Act, Act here means Income Tax Act, or subclause 1 of Clause B of subsection 1 of Section 12A of the Act shall keep and maintain the following. So that means it is talking about, it is referring to two sections. One is Section 1023C and Section 12A. So if you look at these text sections, it is very easy to understand. These sections, let me first show you the Section 1023C. You can read it, but briefly it is talking about, in case of these entities, if the total income exceeds the maximum amount which is not chargeable to income tax in any previous year. That means if there is some taxable income, they are required to keep and maintain books of account in such form and manner as may be prescribed. We will be discussing about that. And not only they have to keep books of account, these accounts are also required to be audited. This is what you can see. Section 1023C is talking about this. If you read Section 12A, also provisions are similar. It is also saying if it exceeds the maximum amount which is not chargeable to income tax, that means if the income of these NGOs are exceeding to that amount, then books of account and other documents are required to be kept as well as audited. So this is the background. Now, what are the books of accounts to be maintained? You can read, you can refer to this, you refer to the screen right now. You can find out the list. One is cash book, then ledger, journal, copies of the bill, whether machine numbered or otherwise serially numbered, whether such bills are issued by assessees, and copies of the counterfoils of machine numbered or otherwise serially numbered receipts. That means bills and receipts has to be kept. Original bills, wherever issued to a person, and received in respect of payments made by any person. If a bill is issued, then that copies has to be kept, right? And original bills If such bill is received, that means some third party has issued some bill, that original bill should be available, that has to be kept. And if payments are made, that receipt also has to be kept. And other books, any other book as may be required to be maintained in order to give true and fair view of the state of affairs of the person and explain the transactions effect. That means to explain the accounting transaction if some other books of accounts are required to be maintained. For example, let us say stock register, purchase register, maybe to justify the salary payment, attendance register. Those books are also required to be maintained. This is what these provisions are talking about. Now, if you see, the next provision is talking about books of account referred in clause A for business undertaking. Referred in subsection 4 of section 11 of the Act. That means if the trust is having some business undertaking, for that business undertaking also books of account are required to be kept. The next provision is also talking about books of account as referred in clause A, a business carried on by the assessee other than the business undertaking. If the particular NGO is having some other business, then for that business also books of accounts are required to be kept. I am showing you the section 11 in the screen itself. Section 11, 4 you can refer to. This is talking about if there is some business undertaking. Let us say there is an NGO which is having some other business undertaking. That business undertaking will also be treated as property held under trust. So in essence, what we are talking about, that for every business undertaking and for every business carried on other than the business undertaking, books of accounts are required to be kept. In addition to that, certain other documents are required to be kept. One by one, we'll be seeing this thing. The important document is that record of all projects and institutions run by the person containing the detail of name, address, and objective. There might be some charitable entity who is dealing with multiple projects, and there might be multiple institutions which are run under them. So for all of them, a record should be kept carrying all these details. For example, you can see maybe name of the project, address, and the objective. A register is required to be kept. This is important. Then I'm showing you the list of records which are required to be kept. First one we discuss right now, which we can call it as the project or institution register, which will be dealing with where we need to record the name, address, and objective of each project and institution. Similarly, register of voluntary contribution also required to be kept. This is another record where you have to record date, name, address, PAN, Aadhaar, amount, and mode of receipt. This has to be maintained with respect to voluntary contribution. Third register, which is important, is the register of income from property. If the trust is having some property and income is coming there from, that register also required to be maintained, containing the date, property description, address, revenue, expenses, net income. All these details should be available. Next, one more register, register of income other than voluntary contribution. If that entity is receiving some contribution other than voluntary contribution, then a record has to be kept explaining the date, description, revenue, expenses, and net income. Similarly, record is also required to be kept for application of income, explaining the name, address, amount of application, objective, PAN, and the application. So where the income is applied, that record is also required to be kept. Next record is about amount credited under section 12AB. So details of name, address, amount, objective, PAN, and application. That means amount received as well as how they are applied. That record is also required to be kept. Application of accumulated income. This is the next record. If income is accumulated, that record is also required to be kept, which should show date, name, address, year, amount spent, and received, and also their application. That record has to be kept. Application of deemed income. Certain transactions will be treated as deemed income. For that, you have to see what is required to be kept: date, name, address, year, amount paid, and objective. So this amount, this record is required to be kept. Income other than application. If there is some income other than the application, then the date, name, address, year of accumulation, amount paid, and objective. Next item is contribution list. List of contribution received has to be maintained, explain the date, name of the donor, amount, mode of transaction, objective, PAN, Aadhaar, and address. All these records are required to be kept. Fund application. If fund is applied for some purposes, date of payment, name of the person, amount paid, mode of payment, PAN, Aadhaar, address. This record is required to be kept. Contribution for repair and renovation. If this kind of contribution is received, then date, name of the person, amount received, mode, PAN, Aadhaar, objective, amount transferred to corpus, date of transfer. These records are required to be kept. Fund utilization. Again, you see date of payment, name of the person, objective, amount paid, mode of payment, PAN, Aadhaar, address. All records are required to be kept. Loans and borrowings. Date of receipt, name of the lender, amount of receipt, mode of receipt, PAN, Aadhaar, address, date of repayment. Then application of loans and borrowings. Date, name of the person to whom payment is made, objective, amount paid, mode of payment, PAN, Aadhaar, and address. Then you see property acquisition list. Name of the property, date of acquisition, cost of acquisition, nature of the property, and address. Property replacement list, date of transfer, name of the property transferred, net consideration, nature of property, date of purchase, name of the new asset purchased, purchase price, and balance. Then transactions with specified persons. That is, specified person means they are those trustees, founders, their relatives. So if there is some transaction with them, then date, name of the persons, amount paid or received, and their modes, nature of transaction, PAN, Aadhaar, address. These are the things which are required to be kept. So I am talking about this 18 records. This is in addition to the basic records like cash book, ledger, journal, etc. Those has to be maintained. Plus this 18 records or registers can be are required to be maintained as per requirement of Income Tax Act. So if any of you is dealing with any NGO or charitable entity, please ensure that the records are kept. Otherwise, there is a violation of income tax rules. Right? So, and one more thing you have to keep in mind that this can be, these rules are also saying, this can be maintained in electronic form or in digital form, and printouts also can be kept. That option is also there. And also rules suggest this has to be maintained at the registered office. And if it is kept elsewhere, then the management must have passed a resolution to keep it somewhere else. And within 7 days of such a decision, the assessing officer must be intimated about the full address where these records and books of accounts are kept. So position is that it is required to be kept at the registered office. If the entity is deciding to keep it elsewhere, then a decision should be there, supported by resolution, and assessing officer needs to be intimated about the address of the place where these records are kept. And these records have to be kept at least for 10 years. And in case there is a process of reopening of the books of account by assessing officer, it has to be kept till that process is closed or the process is finalized. Till that time, books of account has to be kept, but minimum 10 years. That is the requirement. Okay, what I showed you, all these things I have taken from that notification. One can download and refer to that notification. Just I'm showing you some formats of this register. You see the register of voluntary contribution can be maintained like this. Register of income from property can be maintained in this format. Register of income other than voluntary contribution can be maintained in this format. These formats can be useful. This notification itself explains the content of these records. So you can design your format. Right. So this is another format, application of income. One can go through it. Then I'm showing you some other format, application of accumulated income. Just you can have a look. Records can be kept in this format. This application of deemed income, that also can be kept in this format. Income other than application, the format can be designed like this. Voluntary contribution, these records can be kept in this format. Fund application list, funds are that fund application list in this format, records can be kept. Okay, similarly, contribution for repair and renovation. In this format might be useful. Provisions are also I am showing. Contribution for repair or renovation. This format shall be useful. You can have a look. Fund unutilization list for repair and renovation. If some fund is unutilized, record can be kept in this format. Loans and borrowings, details can be maintained in this format. Just one can read the provisions of the notification and design the format. Loans and borrowing, application of loans and borrowings, the record can be maintained in this format. Then property acquisition list, property replacement list, in this format records can be kept. Transactions with specified persons, records can be kept in this format. All these formats will be useful. You can pause the screen and note down this format. Yes. So basically, these are the records which has to be kept, and it is a mandatory requirement. Every entity is required to follow. Thank you very much. Hope this particular video will be useful to you. Thanks a lot.